Hi there, welcome to Kneppy Invest and welcome to another technical update video where I get to look at lots and lots of charts, indices, commodities, crypto. In fact, Bitcoin is looking really interesting, particularly the volume has really popped up the last few days, which could be a sign of capitulation, but I'll talk about that later in the video. Then currency and bonds. Then I might have a look at some individual companies' charts. I've included about 10, I think, at the end of this video in this watch list. But definitely what I will do is have a look at a poll I did or released, the very first poll I released on this channel, which was which of these 10-cent stocks, Seng Networks, Talisman Mining, Aurora Energy Metals, Beam Communications will be the highest at the end of the week. Well, we've reached the end of the week. So that was November 21st. So we can see which of these companies has the highest share price. You chose Seng Networks. And almost half of you thought Seng Networks would have the highest share price. And we await with anticipation which of these companies has a higher share price. I'm going to pick Seng. I have no idea at this point, but I'm going to pick Seng because there is a fair bit of positive sentiment when it comes to that company. It's a small company. In fact, I'd say all these companies are quite small. Okay, and then if I feel like it, we'll have a look at those other individual companies' charts I included at the bottom of the watch list. But we'll start off with looking at the XJO, and this is the weekly chart. 4 big down weeks in a row. Down 1.5, 1.2, 1.5 in the last week, down 2.5%. But funny enough, if you have a look at this particular chart, still in an uptrend. In fact, the XJO has been in an uptrend probably since the end of 2023. Funny enough, that coincides with when banks started their uptrend. So a lot of the movement in the XJO over the past 2 years has been because of the banks. Maybe I should look at an equal weighted indice, but it's still in an uptrend. And a lot of the weakness in the last 4 weeks has been because of the banks, not only the banks, but also tech as well. Now, the last time we saw this sort of negative movement in the XJO was back in February and March. So not that long ago at all. So it does happen, I suppose, quite often where you do see the XJO down 4 weeks in a row. Now, after those 4 weeks down a row in February, March, we had a bounce. 1.82% higher, and then the big down week, 3.94%, and then we had capitulation and then a nice V-shaped recovery. Is that going to happen again? No idea. I have no idea. But if you have a look at the weekly chart, you get a different perspective than looking at the daily chart. Longer term bullish just because it's in an uptrend. Now, if we have a look at the daily chart, a little bit different perspective. In fact, if you have a look at this daily chart, you probably are a little bit more bearish, particularly in the shorter term. Maybe just shorter term, maybe the medium term, because we've had a moving average crossover, a negative one. So 25-day moving average has moved below the 100-day moving average. Last time that happened was again in March. Now, these sort of crosses do happen quite often in the daily chart, but if you have a look at the weekly chart, they don't happen all that often. So this would be the 25 and 100-week moving averages. Last time we had a crossover, it was just for a brief period back in September 2022. And that time was really good buying, particularly tech companies. We haven't had a crossover since. A negative crossover since. There was a positive one back in November. So sometimes these negative crossovers don't last very long. But prior to that was during the COVID-19. We had a very short period crossover back in late 2018. And I still remember that. But they don't happen very often. So you could actually say that these sort of situations where we do get a crossover in the weekly time period, that's good buying. But we're a long way from that right now. We would need to see much more weakness. But on the daily chart, it is, or we have got that crossover. And if you do have a look at the history of crossovers in the daily chart, they happen way more often. And a lot of times it's just a signal of the market going sideways, which is what we saw in 2023. So even though it's sort of a signal, it's not one of my favorite signals. I do prefer crossovers on the weekly chart. And for me, crossovers on the weekly chart, unless we're in a deep recession, are more akin to really good buying, maybe not really good buying opportunities, but buying opportunities. But you still can't deny that we've had a negative move. We've had this crossover. Not only that, I think more importantly than the crossover is on Tuesday, after the Monday it held firm, there was a fall through a support level at about 8,600. I typically think of support levels as little zones. So it would be a fairly narrow zone, this support level. The support level was sort of formed at the high in February before we had the tariff debacle drop in the market. And we saw the Australia struggle to get above that level for a period, maybe about a month, back in June, July. And then it got through, and now on Tuesday fell through like butter, fell through so easy. I'm not sure if that's the right saying. And that was a really big down day on a Tuesday. How much did it fall? Big, yeah, 1.94%. I was expecting a bit of bounce. We sort of had the bounce on Tuesday, or no, Thursday, 1.24% because of NVIDIA, and then the big down day again on a Friday. Now, I do expect Monday to be possibly good just because of what happened on Wall Street on their Friday session, but their futures do open just after maybe just before we start trading, and there is a chance their futures could drive our market up or down. Now, if the futures aren't that significantly lower, I do anticipate a green day on the ASX, probably between 0.5 and 1%. And the reason I say that is because of the TSX. But you definitely could say there is a bit of negative sentiment in the market. You definitely could say that. I'm still getting all these feeds and podcasts and articles about the bubble bursting. And my first thoughts are, like one of you definitely wrote a post, well, if the bubble, because there's so many people talking about the bubble bursting, that probably means it's not. And I did listen to a podcast this morning, and they said the similar thing. This is unusual because everyone's talking about the bubble bursting. And this person said, oh, yeah, we're definitely in a bubble. But everyone's talking about the bubble bursting. And in previous bubbles bursting situations, nobody was discussing it. Another thing I did see was typically before bubbles burst, you see an acceleration in the price. So in this case, with the indices or the prices in individual company charts, we're just not seeing that. We have not seen that acceleration in the prices of AI assets, anything like that. The other interesting thing I listened to was someone just mentioned how gaudily the valuation of NVIDIA is, $5 trillion. And I was like, but that's wrong way to look at it. Don't look at the market cap of the company. Look at the PE ratio, and the PE ratio is below 40, which is not gaudily for typically, particularly for a company that is growing like that. Now, you could argue that the accounts receivable, inventories, they're manipulating that sort of thing, but don't say that a company is over significantly priced, significantly valued, just looking at the market cap. Anyway, that was an economist who said that, so it wasn't really an investor. Anyway, so gone on a bit of a tangent, but we are weak. The XTO is weak on the daily chart, but on the weekly chart, by the way, you can have a look at the monthly chart. I very rarely look at monthly charts. If you have a look at the monthly chart, there's nothing unusual about this. In fact, we very rarely see monthly crossovers. The only one happened on this particular chart was back in 2012, interesting enough. So this just shows you that over time, the market goes up. The market goes up, which is why we invest. Over time, it goes up. Anyway, let's go back to the daily chart. And let's have a look at the XSO. First time I've looked at this since last week. And definitely we're in a bit of a short-term downtrend at least. Now, the last time the XSO was at this level was in August. So we're talking about a 3-month low. Who cares about a 3-month low? Down 2.99% on a Friday session, but the Russell 2000 was up 2.8%. So I do anticipate a nice little bounce in the small caps on a Monday, which is tomorrow. So I do anticipate that. But the question becomes how long could this bounce happen over? How many days could this bounce happen over? Will it be just tomorrow? Will we have a weekly bounce? Is this the bottom? That sort of thing. Or if the bounce is really weak, that would be probably a little bit more concerning. Now, I think the way the bounce might be really weak on the ASX is if the American futures are negative tomorrow and highly negative. But if you have a look at the weekly chart for the small caps, down 3.64% after being down 3.75% 2 weeks ago. But again, look at the run this particular index had over about a 5-month period. So it was due for a bit of a pullback, I think. Okay, so let's turn our attention to the ASX 20. Now, this has been really influenced by the banks because five of the biggest companies, in fact, I'd say five of the 7 biggest companies on the ASX are banks. And we'll have a look at the banking sector indice in a second, and they've had a bad week again. In fact, I'm just going to verify this. List of ASX companies on market index by market cap. What did I say? 5 of the biggest 7. Let's have a look. 1, 2, 3, 4, 5 of the biggest 8. Oh, I was one off. So we have BHP, Wesfarmers, and CSL within that top 8, and Macquarie comes in at number 8. Interesting enough, CSL is number 7. It was fighting with CBA to be the highest valued company not that long ago, and now it's well below. Jeez, pretty good value in CSL potentially. Anyway, back to the XTL. So another bad week for this particular index, down 2.64% last week, down another 2.78%. You could actually say and argue with me, just based off the weekly chart, just like the XGO, it's at the support level, which is the 100-week moving average. We saw this particular index bounce, not perfectly off that, but there was maybe some good buying, maybe. But for me, no. Daily chart starting to look. Oh, we've also had moving average crossover for this one, and there is a bit of support level right there. So that's a little bit lower than where it is now, and that does go back a little bit of support at that level. So 4,550. So I would expect another bounce for this one on Monday as well, down 1.37% on Friday. What about tech? Now, this one has been looking ugly for a long, long time. A lot of weakness in tech companies on the ASX, led by WiseTech. 0 share price, hasn't quite halved, but it's getting there. And 4 bad weeks in a row. In fact, you could say 5 bad weeks out of the last 6 after reaching a peak a few months ago. Not as bad this week, by the way. Only down 2.67%. I thought there was going to be worse. So maybe this has found a bottom as well. And just by looking at this weekly chart, the 100-week moving average has been acting as support a few times in the past few years. Back in October 2023, back in March of this year, a really nice bounce off it. And so we're at that level right now. And to be honest with you, some of the tech companies on the ASX are actually looking really interesting in terms of valuation. So maybe now particularly if you really want to hold some of these companies, maybe now is the time to think about buying. Maybe. I'm just going to throw it out there. Now onto the banks. And the banks have had a couple of really bad weeks. It's led by CBA. The most expensive bank in the history of banking, down 6.1% last week, only down 3%, down 6% 2 weeks ago, only down 3% last week. Really nice uptrend in this one. So if you have a look at the weekly chart, beautiful uptrend, but most of this rise in the banking sector has been led by multiple expansion, not financial expansion. In fact, the banks have been increasing their profit probably slightly lower than inflation. So a lot of this expansion in this particular index has been led by multiple expansion, not financial expansion. And you do prefer financial expansion if nothing else. But I'll always take financial expansion plus multiple expansion. But I would not prefer multiple expansion at the expense of financial expansion, if that all makes sense. And that is what the banks are doing. That is why this index looks really well. So for me, even though this is a beautiful uptrend, I would not play the banking sector right now. Okay. Still would expect a bounce because tomorrow I do think it's going to be a good day. A lot of volatility in mining, led down 4.22% on Friday. If you have a look at in fact, the daily chart doesn't look all that bad, but the weekly chart, a lot of volatility last 3 weeks. So we're talking about down 2.7%, then up 3.9%, and then down 4.43%. And the majority of that 4.43% was on Friday, down 4.22%. And maybe that is capitulation as well. I don't know. Not really. Not looking at this chart. This is a daily chart. By far, it's the healthiest of all the indices we have looked at so far today. You might say it's it's in a channel now. Like it's in a, what do you call it? It's moving in a sideways channel, maybe for like 2 months. I don't know. And if it breaks above 6,900, that'll be a bullish move. But if it breaks below about 6,400, that'll be a negative move. And right now it's at 6,500. Anyway, so, and by the way, it's the mining sector's the mining industry has had a really good run. And this could be just a nice little sideways breathing moment. Definitely more bullish when it comes to mining stocks than any other stock on the ASX. Apart from maybe tech companies, and I do think there is possible argument that some of the tech companies are starting to look good value. Maybe. Yeah, I think there's definitely an argument. Okay, so that's the indices across Australia. Now let's have a look at New Zealand. And New Zealand has been looking stronger. In fact, New Zealand 50 was only down 0.15%. So a bit of strength in New Zealand. Not sure why, but that's what's happening. Let's have a look at this daily chart. In fact, this daily chart looks really nice. Nice little pullback over the last few weeks, but it's still in a well-defined uptrend. What I need to see, for instance, for me to be a little bit more bearish about this, is if the X or the NZ50 falls below the previous lows. It's not there yet. So it needs to fall below about 13,190. And then I need to see a lower high. That would mean it's a new lower low. And then I need to see a lower high. And if we get the two new lower highs and lower lows, that would mean there is a bit of a trend reversal happening. But the most recent high was a higher high. And if we see a bounce, this would mean that another higher low, which is a definition of an uptrend. So New Zealand indices, this index is actually looking better than most, if not all, maybe not mining, but all the Australian indices. So a lot more weakness in Australia than New Zealand. What about the Americans? What about the Americans? I'm just thinking potentially there was a bit of capitulation, just potentially, late on Thursday's session, but I need a bit of confirmation about that. Nasdaq daily is at the 100-day moving average. Doesn't mean it's going to bounce from here, but it could. Weekly chart looks fine. And if you have a look at the weekly chart, very rarely do you see moving average crossovers, only once. And that was probably the best buying we've seen on the Nasdaq for a while, apart from maybe COVID-19. That's when we had a moving average crossover, and that is when I bought a lot of tech companies. But we're a long way from that right now. It doesn't look like a bubble. Just by looking at this, it does not look like a bubble, because what we're seeing now on the Nasdaq, we've seen that for a long time. Were people mentioning the bubble back in, well, maybe they were. They weren't really saying a bubble in 2020, 2021, or 2022. They're just saying it's overvalued. But if you go back through history, it's not excessively greater than, we haven't seen an acceleration in the move up in the Nasdaq, which is another reason why I think more than likely this is not a bubble. Anyway, so a couple of down weeks in a row, 3 weeks down in a row. In fact, 2 of those weeks down 3.1%. But again, we see this all the time. In fact, the Nasdaq back in February, down 3 weeks in a row. Back in July 2024, down 3 weeks in a row before it bounced really nicely. And even before that, we see quite often down 3 weeks in a row. So nothing to be concerned about just by looking at this weekly chart. Even the daily chart looks fine. Nothing to be concerned about just yet. Or what else? Dow Jones up 1.08, so a little bit more strength in Dow Jones than NASDAQ. And again, no reason to be concerned just yet. If this is a low, it's higher than the previous low back in October. So it's still in an uptrend, but probably not as strong as it was. Weekly chart, again, no reason to be concerned. In fact, it's still above the 25-day moving average, which means it's still in a well-defined uptrend. So again, nothing to be concerned about the Dow Jones, nothing to be concerned about any sort of bubble bursting right now. Russell 2000 had a bad week. Not that bad, down 0.78%. For some reason, I thought it had a really bad day, and it sort of did on Thursday, down 1.82%, but a really good rally on Friday, up 2.8%. There is, I was hoping it just got into that purple box and then bounced. That would be really nice. Not as strong of a chart as the other indices in the United States. The pullback has been a little bit more significant, but still nothing to be concerned about, because this particular index was at these levels in August. We're talking about a 3-month low. Who cares about a 3-month low? It's not significant just yet. I think there's too much fear. There's just too much fear, particularly when you see experts saying we're 100% cash, which I think could be the silliest thing to do. Because if this is, say, a bubble, the bubble keep on going for the next 3 years, and you've lost a lot of money if you're 100% cash. I don't know who was it. There's some Buffett disciples who like to go to cash in these times, and they remain in cash until the bubble bursts or we see a downturn in the market. But I'm just thinking, how much money have you left on the table by having that mentality? And their mentality is of the belief that you only buy good, stocks or companies when they're good value. But I'm still thinking, how much money have you left on the table by just being in cash for 3-4 years at a time? But again, we all have different investing strategies, and if it works for them, if they're comfortable with that, go for it. Okay, on to some other international indices. By the way, the futures don't start trading until tomorrow morning, just before we start trading. So I was going to say the futures are up, but we don't know yet. On to some international indices. Looks like a bit of weakness in Asia. Nikkei down 2.4%. But a volatile week, up 2.65% on Thursday, down 3.22% on Tuesday. So a little bit of volatility, but the daily chart looks fine. Just a nice little correction, maybe a little bit of a longer correction than what you might want. Maybe not correction is the right word in this case. Slight pullback. Weekly chart, we did see the Nikkei go on this accelerated move. So this is sort of what you might see on in a bubble, but the accelerated move would be a little bit longer. And I did see a really good graph on this. I forget where. I should have copied it. It's a really good graph looking at all bubbles throughout history, and you always see an acceleration in the price of the bubble before it bursts. We have not seen that yet. So this is what I'll be looking for. This sort of acceleration becoming even more silly. Anyway, so really expected a pullback in the Nikkei eventually. Hang Seng down 2.3% on Friday, and for the week down 5.1%. There you go, 5.1%. This one might be looking a little bit weaker, but it is just above support level. So if we turn attention to the daily chart, you could actually argue this one's looking a little bit more weaker because the most recent high was a little bit lower than the previous high. And this low, is right on the previous low. So you might be able to argue pretty weakly that we've had a lower high and maybe a lower low. But if the Hang Seng falls below 25,000, that would be probably a breakdown and also a new lower low. So not a worse looking chart, but yeah, I could see sort of the signs of maybe a downtrend wanting to form. But I do think this will have a nice bounce on Monday, but who knows? Some of the European, this one's interesting, DAX. We've got a moving average crossover, just like the XJO. This one's been trading in a channel, sideways channel since May. And what you're looking for in these sort of setups is you want to break above the channel, top of the channel, a positive break. So that if you're a bull, and if you're a bear, you want to break below the bottom of the trading channel. It looked like it was going to break below, but there was a little bit of buying coming in on Friday's session, maybe because of Wall Street. And we do see a green candlestick, and it closed just on the bottom of the trading channel. We also had the moving average crossover, but I do prefer to look at the channel. So this, you could argue with the DAX that this is just, because it's been going sideways for 6 months, it's just a bit of a breather before we see the next upturn in this particular indice. What about the FTSE? This one was looking really nice, still looking really nice. So for the longest time, I did prefer the DAX over the FTSE. I definitely prefer the FTSE right now over the DAX. This is just a nice developed uptrend. We had a pullback over about a 5 or 6 day period. In the last few days, we've seen a potential sign that this is the bottom of this little dip. Sideways movement, a little bit of volatility in there. Sort of the market is sort of like a fight between the bears and the bulls right now, and no one's winning. Before that, previously, there was like 5 days or 6 days where the bears were winning, and now it's sort of, they're equal. The bears and the bulls are equal. It's a good fight, and more than likely the bulls will win, because the bulls, I wouldn't say always win, but over time the bulls win. It's better to be bullish than bearish in the very long term. But this is a beautiful chart for the FTSE. On the weekly chart, it's a great chart. Beautiful chart. What about TSX? So TSX was up 0.85%. If I had to guess what how the XJO would do on Monday's session, I would say probably be up between 0.5 and 1%. Don't know if our futures are trading right now. It's going to be interesting to see how our futures are up. I would say 0.4%, but it could be higher than that. This is fairly similar. No, that's the wrong one. I was going to say that's fairly similar to the FTSE, but I was looking at the FTSE. Okay, so this is a really nice. We had a really nice run up in the TSX, and now it's going sideways. This is fairly similar to the DAX, in fact, but over a shorter period, we're seeing the FTSE go sideways. So definitely a bit of a sideways movement in the FTSE, not the FTSE, the TSX, and trading channel, bit of a trading channel developing, looks like. So again, I'd like to see a breakout above that, the top of that. And then if we see it breaking below, that could be a sign of a bit of weakness in the Canadians. But definitely a better looking chart than our charts. Why is that? I don't know. Maybe they're just more optimistic than the Australians. Maybe Australians are really pessimistic. I don't know. Okay, so that's indices from around the world. My favorite indice, what would it be? What would my favorite indice be? I do like the FTSE. Nah, I think Dow Jones, Nasdaq, FTSE, they're all pretty good. Oh, the New Zealand one as well. And probably the worst ones are the Australian ones. Boo, Australia, get your act together. Now on to commodities. We'll start off with gold. Nothing to be concerned about gold at all. At all. In fact, didn't move much during the week. Wasn't there one day where gold was down a lot? What was up with that? So gold was down a little bit, down 0.44%. But the weekly chart shows you all. Gold's been on a really good run since March 2024. We're talking about, what's that, 21 months ago. It's been on a really good run, and on occasion it goes sideways. We've had a periods here where the gold just goes sideways, which is really healthy. Now, before the breakout, gold went sideways for about 4 years. It's going sideways 4 years in the breakout. And what we've seen over the last 4 weeks is just gold going sideways after a really bullish run. We're talking about 1, 2, 3, 4, 5, 6, 7 weeks up in a row. And we've seen this in the past where gold goes on a run and then goes sideways. We saw this in March 2024, up, sideways. Then we saw it go up in August, up, sideways. Then we saw a nice little run back in start of this year, up, then going sideways, and then going sideways again. A little bit more volatility in this sideways movement, but really weird. There was one day gold was down a lot, but how or why? Just based off this chart. But the daily chart looks good. Weekly chart looks good. I don't know why anyone would be selling gold right now, because this could keep on going on for months or years. Even if you think it's overvalued, sometimes it's hard to time tops. Silver, I would expect this to be a little bit more volatile. Nice buying on Friday. So nice little candlestick there with a lot of buying. The reason I know there was a lot of buying, and when I say buying, this is particularly true for individual companies, is now I'm not going to talk about futures because I have no idea how it works, but this one-day candlestick, a long shadow at the bottom of the main body, which means there was a lot of buying pressure coming in, which sent the price of silver up $2. Went from 48 to $2 in 1 day. Other than that, it needs to get above 54, which is almost a double top, but daily chart looks fine. If it fell below 46, that would be a negative move. A rise above 54 would be positive, but no reason to be concerned about silver chart just yet, or even I don't think there'll be any concerns about silver for the next few weeks. The weekly chart for silver looks spectacular. However, it was getting a little bit stretched, well above the moving averages, so it needed a bit of a pause, in my opinion. I'm just going to try to think. There was a little bit, you could see this really good run in silver back in June, July 2020, and then it went sideways for the longest time, which could happen. But the weekly chart looks spectacular. But if you go back to 2010, look at the chart for silver back then. Look at that run. This is brilliant. So, I mean, thinking about this more and more, when you see these really bearish one-period candlesticks, and we see that with silver, with really high volume. This was May 2011. For me, and I'm starting to think this is a sell signal. Just sort of like what I would say is a trend killer event. This is a trend killer event. As soon as you see this, get out. Now, you might see a bounce. We had that. But then there was another big red candlestick in September 2011. So I'm thinking those sort of signals, those really big, long red candlesticks are sell signals, because that was the top for silver. Okay, but we haven't got that yet. That's silver, looking pretty good. What about copper? Weekly chart for copper, nah. Let me get rid of this purple box. Yeah, you could say there's a weak uptrend developing, and here we had that really big down week, 23.3%, but I think that was just a one-off. I can't remember exactly what happened, but that was just one-off thing, and I think the market was overreacting. So the other thing is that was it was starting. It wasn't really at the top. It had copper had run for a little bit, but not very long. So you couldn't really say it was overbought. And then it actually did drop all the way back down to the 100 moving average, which has been acting as support for about 2 years for copper. But not my favorite chart. Daily chart for copper, nah, not my favorite chart either. Yeah, that makes sense because I'm not that interested in copper at this point in time. Iron ore, a lot of interest in some iron ore companies, which surprises me because when you have a look at the iron ore chart, daily chart, not much happening here. Maybe a very slight uptrend, but nothing much happening. No reason to be excited with iron ore. In fact, you could say and argue it's been going sideways for about 2 years. And let's confirm that by looking at the weekly chart. Yeah, it's meh. For me, iron ore is a bit of a meh. So I do like a few iron ore companies, but I don't own them right now. And yeah, it's not high. The price of iron ore is not high. It's not low. Like if iron ore was down at 60, 50 or 40, it got down to 40 back in 2016. If it was that low, I might be a little bit more interested because that might signify the bottom of a cycle. Uranium, a little bit more interested in uranium, but yeah, I don't own any uranium companies just now. I've been thinking about it. The price of some of these companies has or did pull back during the week. Sort of understand that just based off this. Uranium down 1.65. That's the spot physical uranium. The other uranium, which you could be following, you'd say that they are sort of similar. They are similar. I just like the spot physical uranium. And for me, a big math for me when it comes to uranium right now. Daily chart, maybe a bit of a pullback. One nice a 1 day candlestick, by the way. That's a nice 1 day candlestick. Bit of buying there. Now onto oil, and a big ma for me. Oil is a massive ma. Funny enough, it's at 57.97, and when I look at this is the weekly chart, and it looks like it's moving towards $55, which was the lows back in May of this year. And my big question right now is why are we paying so much at the oil pump when oil is fairly low? In fact, if it goes below $55, we're talking about a 4-year low. I can almost guarantee you the prices we're paying at the petrol pump is not a 4-year low. Anyway, I'm going to just say this. When I came back from my trip overseas, the first thing that I realized over there was how much more expensive everything is. I expected a lot of food to be much cheaper, but it's sort of similar prices than you pay here, even with the exchange rate. Living there for 8 years, I have always thought of the United States as having much cheaper food and that sort of thing. And I didn't find that this time. And then when I came back here, I was absolutely shocked how much more expensive food was here in that 2-month period. Some of the stuff I buy on a weekly to bi-weekly period, some of the prices of food was up 25%. And fun enough, I listened to a podcast and they were trying to figure out why is inflation running hot? And I was screaming, because look at the food. And then this was IGA. And I was thinking to myself at the local store, and I was thinking maybe they've increased the prices because we're moving into the tourist season. Then I went into Tare and the prices at Woolworths and Coles were just expensive. And I was like, how did all these prices of all these food go up over the last 2 years by as much as 25, 30%? There's one thing I really noticed. I'm paying way more for that. And it didn't surprise me that inflation is up. I don't know why it's up. I didn't actually read it all that much. Anyway, gone on a bit of a tangent there. Now on to natural gas. By the way, weekly chart for oil looks meh. Daily chart for oil looks meh. And that's what I'm going to say. But natural gas sort of broke out about 3 or 4 weeks ago, and the weekly chart looks really good. I saw this almost at a breakout level. There you go. Natural gas is looking really good right now. So maybe time to get into gas. Lithium still above 10. Well, this chart is above $10. I'm just going to have a look at lithium chart because we did see a big pullback on Friday. A lot of lithium companies pulled back, but that could be just sentiment. It may be nothing to do with lithium prices because lithium, and look at this. This is a beautiful looking chart for lithium. In fact, this is the sort of chart you want to see. There was a high back in August, then there's a dip, and now we've gone to a new high. So just based off this lithium carbonate chart in trading economics, it's an absolutely beautiful chart. Look at the 5-year chart. You just see how much more it could go from here if, a lot of ifs, if things move in the right direction for lithium. Anyway, so lithium is one of my favorite players right now because I do think we have seen the bottom of the cycle. Anyway, that's lithium. Coal, I'm sort of on and off with coal. I own one coal company, and I don't know about coal. This chart, the weekly chart, maybe we're in a sideways movement. If you go back through history, the last time we had the price of coal fall a fair bit, we saw a recovery fairly quickly, and we're not seeing that now. In fact, twice. We're not really seeing that now. It's just going sideways. Maybe this is healthy. Tin's looking good. There's a nice chart for tin. The only company I know on the ASX to play tin is, well, there's two. There's Metals X. Is it Metals X? There's also the Brazilian company, CTM, Centaurus. I'm pretty sure they're tin. Anyway, not a lot of tin plays that I can think of. So maybe it's just me. Maybe I'm just an idiot. Nickel, not the biggest fan of nickel. I usually should just move on. Palladium, weekly chart looks good. Looks like a bit of a flag or pennant. We had the run. Definitely seen this in the weekly chart. Had a nice run and it's been going sideways and down a little bit. But a nice chart. This sort of reminds me, this little period here going down slowly reminds me of July and August and before it started to turn up. And finally, cocoa. One of the things that we have seen a significant increase in price is chocolate products. That's not only funny enough in the United States. So I mentioned I could always, as a student over there, I found food to be really cheap. You could, like for instance, if I bought a Coca-Cola, still significantly cheaper over there. But one of the things I found more expensive over there, and maybe even significantly more expensive, was chocolate. I was really shocked how expensive chocolate was over there. Like they sell Cadbury, which they never used to sell Cadbury. Okay, so cocoa prices going down. Maybe conditions are good for growing cocoa right now. Okay, now on to crypto. And I got a little bit excited when I saw this chart. Not the chart, but the massive volume we saw on Friday. And for me, this could be a bit of a sign of capitulation. Not only massive volume coming on that day, we saw a lot of buying coming in. The price of Bitcoin got to about 80,000, and then we saw the buying coming in. Last few days, we've seen a bit of a lull in the selling, but maybe that's because of the weekend. So wouldn't be surprised to see this as the bottom. Now, have we seen that in the past? Bottoms? Was there a big spike in volume? Yeah, there was a bit of a spike in volume at the bottom there. Not so much there, but that wasn't really the bottom. What about going a bit further? Look at that. Look at that massive volume on the 5th of August 2024. That was the bottom. And what about going even further back? Let's go to this bottom. Yeah, look at this bottom here. Look at the massive volume at that bottom. So this was back in November 2022 at a price below 20,000. That was bottom. And then we saw some really good volume coming in a few months later, and that was sort of the shift in trend. And then look at the volume here. There was really big volume, by the way, in May. That was not the bottom. And then the price of Bitcoin went sideways. So we didn't see the bounce, but then we saw some more big volume coming in a few months later, or 1 month later, in June 2022. What about the extreme bottoms? Like I'm talking about, when was Bitcoin really hot? I thought it was like 2017. Yeah, 2017. And the bottom, I don't know when the bottom was here. There was bigger volume coming in as the price of Bitcoin dropped, but the bottom, there was some big volume coming in, but really big volume on that dive in November 2018. Okay, I've gone a little bit longer. I just wanted to see if there was any sort of historical evidence in Bitcoin that when you see a peak, a spike, that's the word, and for some reason, there we go. If you see a spike in volume, you know what I can do? Just press. Oh no, I'm at the end. Should be a little symbol that you can press to go to the end. I'm just wondering if this could be a sign that we're at the bottom for Bitcoin, just this big spike in volume. In fact, the volume has been growing, and then all of a sudden, big spike. Ethereum, I don't really care. That's also sort of a bit of a peak in volume, but not as obvious as Bitcoin, because you can see a lot of peaks in volume or spikes in volume with Ethereum. Okay, now let's move on to bonds. It's quite warm in here. Oh, need a towel. 30-year bonds, this is boring. Not much trend at all with 30-year bonds, but for the first time in this video, Japanese bonds. This is a Japanese 30-year bonds. It's been in the news lately. Did drop on Friday. I'm wondering if the whole reason the American Wall Street rallied is because of a drop in the 30-year Japanese bonds. There you go. But I got to 3.4% on Thursday. A lot of chatter in the Twitter sphere about that. A lot of people think this is the end of the world. I think they're being a little bit overly dramatic, which is what they do. Maybe I should do that. Maybe I should become overly dramatic so more people watch this show. People, the end of the world is coming. I have on good authority that in a few weeks' time, we're going to see the end of the world. I've been talking to my friends. They are aliens from a distant planet. And they said, look, we have to destroy the planet, the Earth, because it's in our way. So unfortunately, that's the end of us. But of course, they were a little bit vague on exactly when. So if it's not in 2 weeks, it could be 5 weeks or 8 weeks or 20 weeks or next year or 5 years from now, or maybe 20 years from now. I'm just not absolutely sure, but because they gave me it in clues or riddles, and who knows. 10-year Australian bonds. I think this has gone a little bit of a rally because of our increase, higher than expected inflation. That's my thoughts on the bond yields here. And finally, currency. What we don't want to see here is the Australian dollar going higher. In fact, we really want it to drop. In fact, I'd love to see the Australian dollar drop to, say, 0.000064 cents, and then I'd become a millionaire because I still have like $80 on my counter, American dollars. So I'm being a little bit selfish in saying that. And I think one of you actually said that, because I did mention that in another video. Okay, that's it for this portion of the video. In fact, I've gone 45 minutes, according to this. So what I'm going to do, I'm not going to have a look at some of these individual companies. What I'm going to do is have a look at this poll. So 4 companies. We have Seng, Talisman, Aurora Energy. And what I'll do is I have a look at the charts for all these. And Beam Communications. And what I might do is tomorrow morning, I might do another poll like this. Unfortunately, we can only include 4 companies in a poll. Don't know why they limit it to 4 or below or less. Why not 5? 5 is a really good number. Okay, so let's start off with Talisman Mining. 11% of you picked that company. Let's have a look to see if the chart is good. And ugly. This is an ugly chart. Talisman Mining, you need a talisman to find your way better. Share price looks like it's right on 10 cents, so not much movement. Yeah, finish right on 10 cents. Let me just confirm. I'm going to use this to confirm. TLM, finished right on 10 cents. Oh, 9.9, wait there. Let me see how I got that wrong. Oh, no, it says it up there. Close 9.9. So Talisman down 9.9. And just by looking at this chart, I probably would not have picked Talisman. By the way, I did not look at any of these charts when I chose these 4 companies. It was just choose 4 companies whose share price is at 10 cents. The next lowest company you chose was Beam Communications. I do know a little bit more about this company. And the share price looked like it was breaking out maybe a little bit ago, not that long ago. Let's have a look at this chart. Yeah, so share price looked like it was breaking out middle of this year, and then we had a bit of a pullback. And unfortunately, share price is now 9.6 cents. Look at the volume, no volume at all. And let me just confirm, share price is 9.6 cents. Yep, 9.6 cents. So you're doing really well. Well, maybe Seng is like 5 cents, which means you'll not be doing really well. The next company you chose was Aurora Energy Metals, 1AE, which means it's recent listing, I think. 29% of you chose this company, so it's not bad. So there's a chance the chart for this one looks really good. Well, maybe not really good, but better than the other two. Let's have a look at Aurora Energy Metals. And unfortunately, share price at 9.5 cents. Although the chart does look better. I definitely agree with that. The chart does look better for this one. Now, the problem with choosing share price of a company over a week period is a lot of it's just luck. And finally, we have Seng. Now, this chart does look good. I do agree with this chart. The question becomes, did we see the share price pull back during the week? I have a feeling no, but let's have a look. Definitely looks better. Look at that volume back in September, late August, early September, around their, was it results? And the share price got as high as 12 cents during the week. There you go. And finished at 11 cents. So our winner is Seng, finishing at 11 cents. The one negative thing about this chart is the volume. We have seen a dry up in volume. So the market has become a little bit less interested in Seng in the past few weeks. Okay, that is all I have for today's video. I'll put another poll on in regards to which company will be the highest in the next week or something like that. And choose wisely, because you did really well. You did really well last week. Most of you got it. No, actually, no, 47%. So the majority of you did not get it right, but 47% of you did. So we're talking about 18 out of 38. Okay, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.